World Trade Organization lowers its forecast for global merchandise trade. China's gross domestic product grows by 5.4% year-on-year in the first quarter of 2025. And NVIDIA to incur a $5.5 billion charge due to the U.S. export restrictions in H20 chip. And welcome to Qnews Economic Bulletin. We start off with the global news as the UN Trade and Development Agency has reported that global growth is projected to slow to a 2.3% in 2025 as trade tensions and uncertainty drive a recessionary trend. The UNCTAD stated that the global economy grew at 2.8% in 2024, highlighting significant deceleration compared to the average annual growth rates registered in the pre-pandemic period. It added that the global outlook for 2025 is marked by the highest level of policy uncertainty seen this century, causing companies to suffer losses and delay investment and hiring. Moreover, the World Trade Organization has lowered its forecast for global merchandise trade from solid growth to decline. It stated that the U.S. tariffs would reduce global trade growth by 0.6%, and spillover effects could lead to an additional 0.8% drop, the steepest slump since the height of the COVID pandemic. The WTO expected trades in goods to fall by 0.2% this year, down from its expectation in October of a 3.0% expansion. The WTO expected commercial services trade to grow by 4.0% in 2025 and a 4.1% in 2026, well below baseline projections of the 5.1% and 4.8%. The expected downturn follows a strong 2024 when the volume of the world merchandise trade grew by 2.9% and commercial services trade expanded by a 6.8%. And moving to the United States, the Commerce Department's Census Bureau has reported that the U.S. retail sales experienced a robust increase of a 1.4% in March. This increase was driven primarily by a surge in motor vehicle purchases as consumers rushed to buy before the implementation of President Donald Trump's 25% tariffs on cars and trucks. Economists had anticipated a 1.3% rise for March. Core retail sales, which exclude automobiles, gasoline, building materials, and food services, rose by an 0.4% in March, following an upwardly revised 1.3% increase in February. And regarding the tariff policy, the White House has announced that China now faces a new tariff of up to 245% on imports to the United States as a result of its retaliatory actions. It added that just this week, China suspended exports of 6 heavy rare earth metals, as well as rare earth magnets, in order to choke off supplies of components central to automakers, aerospace manufacturers, semiconductor companies, and military contractors around the world. In response, the Chinese Foreign Ministry spokesperson Lin Jian said that you can ask the U.S. side for the specific tax rate figures. He added that China has repeatedly stated its solemn position on the tariff issue, highlighting that the tariff war was initiated by the U.S.
And the president spoke to the Sultan of Oman today, who helped facilitate these talks. I have a readout for all of you.
And meanwhile, China's foreign ministry has called on the United States to stop exerting maximum pressure if it really wants to solve issues through dialogue. Foreign Ministry spokesperson Lin Jian said that there were no winners in a tariff or a trade war, and the U.S. should engage in talks with China on the basis of equality, mutual respect, and reciprocity. Lin's response came after the White House press secretary Caroline Leavitt said that the U.S. President Donald Trump is open to making a trade deal with China, but Beijing should make the first move. And Canadian Finance Minister François-Philippe Champagne has stated that the country will get an exemption from Ottawa's retaliatory tariffs to domestically based automakers and manufacturers in specific sectors from counter tariffs provided under certain conditions. The minister announced that auto manufacturers will be allowed to import a certain number of U.S. assembled vehicles, ones that comply with the Canada-U.S.-Mexico agreement on trade free of the countermeasure tariffs. The number of tariff-free vehicles a company is permitted to import will drop if there are reductions in Canadian production or investment. And on another note, the Bank of Canada has announced that it is holding its key policy rate at a 2.75%, marking its first pause after 7 consecutive cuts. The central bank cited uncertainty surrounding the U.S. tariffs as a reason for not issuing regular economic forecasts. Instead, it presented 2 potential scenarios, one predicting a deep recession in Canada and a spike in inflation, and another assuming the withdrawal of most tariffs leading to moderate economic growth. And Governor Tiff Macklem stated that the bank would proceed cautiously as it assesses the impact of tariffs on the economy. And in Asia, the National Bureau of Statistics has reported that China's gross domestic product grew by 5.4% year-on-year in the first quarter of 2025. The country's GDP reached a 31.8758 trillion yuan during this period. And on a quarterly basis, the economy expanded by 1.2% in the first 3 months of the year. This growth follows a 5% year-on-year increase in GDP for the previous year, and the Chinese government has set a target of around 5% growth for the entirety of 2025. Official data has revealed that China's retail sales of consumer goods, a key indicator of the country's consumption strength, expanded by 4.6% year-on-year in the first quarter of 2025. This growth marks a 1.1 percentage point increase compared to the previous year, with the total retail sales reaching at 12.4671 trillion yuan. At a press conference in Beijing, Deputy Director of the National Bureau of Statistics highlighted that urban consumer goods retail sales rose by 4.5%, while rural sales saw a slightly higher increase of 4.9%. The growth in retail sales was bolstered by a surge in purchases related to the National Trade-in Program, which incentivizes consumers to upgrade their goods. And the Bank of Japan Governor Kazuo Ueda has stated that the central bank may need to take a policy action if the U.S. tariffs hurt the Japanese economy. And according to the Sankei newspaper, Ueda stated that the BOJ will continue to raise interest rates at an appropriate pace if economic and price developments move in line with its projections. His remarks reinforce dominant market views that the BOJ will hold off on raising interest rates from the current 0.5% at its next policy meeting on April the 30th to May the 1st. He also added that the BOJ's next rate hike will come after either in July or September, with a September move now more likely than July. Hong Kong Post has suspended the goods mail services by sea to the United States and will suspend its air mail postal service for items containing goods starting April the 27th due to the bullying of the U.S. tariffs. This comes as Hong Kong has been subjected to the same tariffs as China. Hong Kong stated that when sending items to the United States, Hong Kong people should be prepared to pay exorbitant and unreasonable fees due to the U.S.'s unreasonable and bullying acts. However, other postal items containing documents only without goods would not be affected. And Singapore's trade minister has announced a task force to help businesses and workers address challenges. Trade Minister Gan Kim Yong, also the Deputy Prime Minister, said that companies in Singapore have already been affected by the trade war between the U.S. and China and warned of a further global economic impact if Trump were to put additional tariffs on semiconductor and pharmaceutical industries. Gan chairs the Economic Task Force of 8 members, including ministers, civil servants from various ministries and representatives from business associations and the labor union. And the Office for National Statistics has revealed that British house prices experienced their most significant annual increase in over 2 years, rising by a 5.4% in the 12 months leading up to February. The average house price reached £268,000, marking the fastest growth since December 2022 and an increase from January's 4.8% rise. The surge in prices can be attributed to the impending expiration of temporary tax incentives for buyers of less expensive homes and first-time buyers, which encouraged many potential purchasers to expedite their buying plans ahead of the March deadline. And in the tech sector, Alphabet's Google is being sued in Britain for potential damages worth about £5 billion, alleging that the company abused its dominant market position in the online search industry. The claim also alleges that Google has ensured its search engine offers better functionality and more features for Google's own advertising offering than that of its competitors. NVIDIA announced that it will incur a $5.5 billion charge related to the U.S. government's restrictions on exporting its H20 artificial intelligence chip to China, a key market for the company. The charges are associated with inventory purchase commitments and related reserves for the H20 products. Following the announcement, NVIDIA's shares fell approximately 6% in after-hours trading. The U.S. Commerce Department has mandated that a license is required for the export of the H20 chip, which is designed to comply with existing export controls. And moreover, Advanced Micro Devices, the AMD, announced that it expects to incur charges of up to $800 million as a result of the latest export curbs imposed by the Trump administration on advanced processors to China. AMD confirmed that the export control specifically applies to its MI308 products. According to AMD's filing, the anticipated $800 million charges relate to inventory purchase commitments and reserves. While AMD plans to apply for licenses to export its products, the company noted that there is no guarantee that these licenses will be granted.
Tech stocks took a hit after NVIDIA warned that which are part of a broader crackdown influenced by Donald Trump's trade agenda target advanced chips like the H20, now requiring a license for export to China. NVIDIA's shares dropped nearly 6% with ripple effects across global chip markets. In Asia, Japan's Advantists and Taiwan's TSMC also saw losses. The U.S. says the move aims to prevent China from using American chips in supercomputers. But it blindsided Chinese clients like Alibaba and ByteDance, who have placed $18 billion in orders for the H20, the last legal option available after previous bans. Trump, pushing to boost U.S. manufacturing, hailed NVIDIA's plan to start domestic production in Arizona and Texas as a win for American industry. The new rules raise fears of deeper trade rifts. China made up 13% of NVIDIA's revenue last year, and now local players like Huawei may step in to fill the gap. As Washington sharpens its tech restrictions, the global chip race is entering more unpredictable and political phase.
And joining us from Cairo is the board member at the International Association of Management of Technology, Mohammad Azem, to discuss the announcement from NVIDIA regarding being charged the $5.5 billion due to Trump's decision on the chip export controls and the impact of the U.S. trade war on the tech sector. Welcome to Qnews.
Thank you so much. Always pleasure being with you. We are witnessing a complete chaos, actually, due to Trump tariff war. And a company like NVIDIA lost over the last 3 months almost 1.2 trillion US dollar. This amount is equivalent to the GDP of Austria and Switzerland combined. So you can imagine the effect of losses on a company, on a leading company in semiconductor industry that's equivalent to the GDP of 2 European countries. Actually, we are living in an era of uncertainty. Nothing is clear, and definitely this war will actually has an impact on other semiconductor manufacturers, including Samsung in South Korea, that's including Taiwanese semiconductor manufacturing company, which is the largest chip manufacturer all over the world. In spite of their plans to have more investment in U.S., actually TSMC announced that they're going to invest almost 100 billion in U.S. and coming for a few years. However, this is not easy because to have a plant for semiconductor, actually, you need at least 2 years to be operational, and this will need from 10 to 20 billion US dollar investment. And on the top of that, actually, you need qualified technicians, you need qualified engineers, and this is very challenging to acquire such skills in a very short time. And of course, the US market is not ready to have such reallocation of such advanced technology over a very short span of time, which is actually we are talking here about a real chaos that will affect everything, because semiconductor industry actually, in spite of its value as it's almost 700 billion US dollar a year, however, it's very critical, it's very crucial for every industry, starting from powering a washing machine up to powering a military.
Sir, can I just ask you, and if you can also share with us, please, in what ways do these export controls, do you think, exemplify the ongoing trade war between the US and China, and how might they escalate tensions further?
Actually, this will make a real disruption to the global market in every single economic sector. And of course, this will be led by the high-tech industry or business sector. So having this license, usually United States have such license to export advanced technology. And this has been started especially in the domain of artificial intelligence and supercomputing computing chips during the first term of Donald Trump back in 2018. This will actually increase the problem. This will deepen the problem, and of course, this will lead to a serious consequences on all over the global marketplace, because if you look at any industrial sector, is totally dependent on using and employing technology to a great extent. Otherwise, we are talking about industrial or economic sector belong to the last century or even the century before. So this is has to come to an end, actually, because this will not harm a specific country or a specific region. Actually, this will harm the global economy in a very severe way. We are witnessing a typical global economic war, and no one will survive such war, and no one will actually could win such war in spite of all tariffs that or the tariff war led by the Trump administration. However, this is no
Actually,
one can
related to President Trump's adding the tariffs, he also praised NVIDIA's plans to increase domestic production in the U.S. How significant do you think is this shift for the U.S. tech industry, and what challenges might NVIDIA face in scaling up production domestically?
This very ambitious plan, actually, because semiconductor industry is very sophisticated industry. It needs infrastructure. It needs a very qualified labor, especially engineers and technicians. And this not easy to find with such a scale within over a very short span of time. So this is very challenging, because if you can have the technology and you can build a chip manufacturing plant, and you have the financial instrument to do so, but how we can get this kind of very advanced skills from the local market over 2 or 3 years, this is almost impossible. Especially almost 60% of the talents are coming from the Far East or East Asia, especially China, Taiwan, Korea, Japan, and so on and so forth. So this is not an easy task to reallocate such talents or having such talents immediately, or even within the coming 2 years. This is actually this very nice plan, but actually the implementation would be very challenging. No one can do that.
Well, thank you, sir. And from Cairo, that was board member at the International Association of Management of Technology, Mohammed Azem. Thank you so much for your insights and joining us today. And now we move on to the latest developments from the commodities sector. Gold prices extended their record run on Wednesday to breach a $3,300 per ounce as a weaker dollar and escalating U.S.-China trade tensions pushed investors towards the safe haven asset. Spot gold climbed a 2.5% to $3,308.17 an ounce after hitting a record high of $3,319.17 earlier in the session. The U.S. gold futures gained 2.6% to a $3,324.50. And oil prices rose more than $1 a barrel on Wednesday after Washington issued new sanctions targeting Chinese importers of Iranian oil. Brent crude futures rose a 1.67% to $65.75 a barrel, while the U.S. West Texas Intermediate crude rose 1.86% to $62.47. In markets on Wall Street sank today as Nvidia and other technology companies were hit by the tighter U.S. controls on exports of advanced computer chips used for artificial intelligence. Futures for the S&P 500 were down a 1.17%, while futures for the Dow Jones Industrial Average were down by an 0.50%. In Europe, Germany's DAX rose a 0.27%, and the CAC 40 in France down. In Asia, Tokyo's benchmark Nikkei 225 declined a 1.01%, Hang Seng dropped a 1.91%, while Shanghai Composite increased an 0.26%. The Russian ruble strengthened to 82.3 to the US dollar, making it the best performing currency in the world year to date and outperforming even the traditional safe haven of gold. According to the Russian Central Bank, the real effective ruble exchange rate in March rose by a 7.1% compared to the previous month. In annual terms, the exchange rate rose by a 19.2% in the January-March period. The central bank has implemented a stringent monetary policy, raising the key interest rate to 21% in response to rising inflation, driven by increased military expenditure that has pushed up the currency's value. And that brings us to the end of our economic bulletin, and here's what we have been covering. World Trade Organization lowers its forecast for global merchandise trade. China's gross domestic product grows by a 5.4% year-on-year in the first quarter of 2025. And Nvidia to incur a $5.5 billion charge due to the U.S. export restrictions on H20 chip. And this concludes our economic bulletin. And don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at Qnews EG to stay informed. And thank you for watching, and stay tuned for more updates on Q News.